Hey everybody, this is Jim at SP500chart.com. It is about 7:30 on June 12th, 2014. Let me read this to you, then we'll take a look at the chart. The website in this video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, today, without a doubt, our rising channel that lasted for really, we could go back to here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days. Then the last 2 days, we broke down out of this channel. We'd also looked at a couple of very small channels that were taking place inside this one. But there's something I want to do, because we know we've got this target up here at about 1990, and we reach about 1950, what was it, 54? Yeah, we get up to 1954, and now we find ourselves 24 points underneath that. Wondering, I am, well, how are we going to get to 1990? We just broke that nice and easy path. Well, first thing I want to say is this. There's nothing in the book that says you make your target in one quick move. As a matter of fact, oftentimes you don't. Now, you'll remember that we were looking at a couple of different things as relates to this inverted head and shoulders pattern. Here we go again, left shoulder, head, right shoulder. What I want to remind you real quickly, we've got 3 places where you put a buy on an inverted head and shoulders pattern. It's whichever of these 3 things happens first. First, you take a line, draw it from your head, bottom of the head, through the bottom of the right shoulder. You extend that out, and that becomes a buy signal. If you tag that line right here, you buy. Or if you tag the neckline first, you buy. Okay, whichever one happens first. And then the last one is if you get a 40% retracement from the end of the breakout move. So we put down, here is where our I'm going to say this is the bottom of the left shoulder, of the right shoulder. You could say it's here. Tell you what, let's be safe. We'll split. We'll say it's right here. We'll just kind of make it thereabouts. And then we look for the 38.2% line, and we come to a level of about 1916. Now there's one more thing I want to do real quick. We're going to get rid of these little tiny channels. They don't matter anymore. What I want to do now is I noticed something just a little while ago. Oh, by the way, that 40% retracement is above our neckline, and it's going to be above our neckline for quite a while. So I don't think we should return to the neckline. We should either tag this line or get down to that 40% retrace level, which is actually the 38.2 on this tool, of about 1916. Now, we have seen in the S&P a number of times where we have noticed a particular level of attack having a certain slant to it. This line right here. We had this line at this point at one spot. Then we can go back here. There's some bottoms that line up there. We can move this line a number of different places, and you can see how often things will line up with this level of attack. Now, if I put this line on what I believe is a short-term top at 1954, you will notice that that also lines up with this little top back here. I'm going to create a parallel line and slap it right there now. And just again doing the same little exercise that at least caught about 30 points of move in the S&P. I'm going to keep this line here. Going to make them different colors. Let's make them orange. And basically, I'm wondering if we might bounce on this line right here. So we've got 3 places then we might look for a firming up, because this channel right here is definitely broken. I would say maybe we would firm up around 1920. If not there, then the 38.2 retrace level, which is at about 1916. And actually that would have to happen pretty quickly, because the next thing that we would hit would be in about a week and a half. Then this line right here would come into play. But obviously, I think we can call this level up here at 1954, this is the end of our breakout move. So now that we know where the end of the breakout move is, we can measure the retracement from the bottom of the right shoulder to, something. I'm going to move this right here, because if we define our head right there, then this should be the bottom of our right shoulder. So that gives us a level where we should get some support at around now at about 1918. So I don't think we're too far away from where we should bounce. This will be interesting. Again, it would have been great if that channel had kept working, but you can see it is at a higher and at a much more aggressive pitch than what we've seen over intermediate lengths of time in the S&P. So it was due to break. Though I would have loved for it not to. I think when you look at in context, it's not. I don't think it's appropriate to look at this and say, yeah, we're going to go from 1860 to 2000 in a month. That's not realistic. So this broke. We're backing up for a bit here for about 4 days now. So let's see where we bounce. Wherever we bounce, if it is this line right here, then that would be great. If not, then like I said, we've got our 40% retracement at about 1918 and change. We should bounce there. If we don't bounce on that line and we continue to go sideways for a while, then we would run into this ascending support line from the bottom of the head and the bottom of the right shoulder. So guys, I think that's going to be about it. We could take a look at this, and it appears to me that we saw some accelerated selling today. Could that possibly be indicative of a little capitulation? Maybe short term, maybe, because it kind of looked like we had some bottoms lined up here pretty nicely, but that broke, and that is a descending line. So you don't normally expect descending lines to give way like that. Maybe that's a sign that some of the selling is now being worked out of the market, and this descending channel that we had been turned into something a little bit more steep over the past day and a quarter. So if you're looking for a sign as to when this might turn around, I would give you 2 things. I would say the first thing would be a break of this line right here. The second thing would be a break of this line right here. So with that in mind, let's make both of those lines. Oh, what's a good color? Let's make them dark green. So if we break, I'm going to make, well, I'll make this one blue because it looks like a descending sort of a wedge. So guys, let's see if we can start to firm up, find a bottom somewhere down around here, and then turn it back around and head back up for 1990. Thanks for watching. Thanks for your support, and take care. By the way, I'm standing pat with my trades right now. I'm really not that worried about this. So, not telling you what to do. That's not my job. Just pointing out what's going on in the chart. So let's see if we turn this around starting tomorrow or maybe the first of next week. Thanks again for watching. Take care.